Are you a veteran or a full-time service member looking to lower your monthly mortgage payments without the hassle of a full refinance? What if I told you there's a VA loan program that could save you thousands of dollars without requiring income documentation, without requiring extensive credit checks, and without requiring an appraisal? In this video, I'm going to go over everything you need to know about VA IRRRLs, which is the ultimate refinancing tool for VA loan holders. So make sure you stay tuned because you don't want to miss this. Now, if you're watching this going, Jeb, what is a VA IRRRL? The VA IRRRL is actually an acronym. It stands for VA Interest Rate Reduction Loan, which is a special program designed specifically for veterans and active duty service members to refinance their existing VA loan into another VA loan, typically at a lower mortgage rate. Now, this program can also be known as a VA Streamline. So regardless of whether you're talking about an interest rate reduction loan, an IRRRL, or a streamline refinance, we're essentially talking about the same thing, which is being able to refinance your loan into another loan with very, very little documentation while potentially saving you thousands of dollars on the back end. Now, if you're watching this going, who qualifies for the VA interest rate reduction loan? Well, it's actually someone that already has a VA loan in place and they're trying to either refinance to lower their mortgage rate or to get out of an adjustable rate mortgage into a fixed rate mortgage. Now, for the majority of VA loan holders out there, this is going to be for your primary residence, the main residence that you live in, because when you get a VA loan, essentially it has to be owner occupied. But here's one of the common misconceptions about VA IRRRLs, and that's that they can also be used for investment properties. But the catch is that home must have been a primary home at some point. Now, as I mentioned earlier, one of the biggest benefits of a VA IRRRL, which is the potential for lower monthly mortgage payments due to a reduced interest rate. But on top of that benefit, there's a huge benefit of being a VA loan holder, which is exactly what I'm going to go into right after you hit that thumbs up if you find any value in my videos at all. And if you want to stay updated on everything VA mortgage and real estate related, do me a favor and subscribe to the channel. The biggest benefit when it comes to doing an IRRRL, an interest rate reduction loan, in my opinion, is that you get to potentially take advantage of lower monthly mortgage payments by reducing your interest rate without having to provide any real documentation with that loan. And what I mean by that is you're typically not having to have your credit score run. So they're not going to do any sort of extensive credit check. On top of that, you're not having to provide any income documentation like you did when you previously purchased the home. Originally, you had to provide pay stubs and tax returns. Well, this time, you don't have to provide any of that. And on top of that, in most cases, no appraisal is required at all. And that's why it's also known as a streamline refinance, because the process is more or less streamlined, because you're not having to provide all of this additional documentation, which means not only are you taking advantage of lower monthly mortgage payments with a lower interest rate in most cases, but you're also doing it in about half the time. Now, if you are a VA loan holder and you're watching this, you're probably going, okay, Jeb, what's the catch? What is the caveat here to the process? And to be completely honest, there's not really one, other than the fact that you're going to have an additional funding fee again. So when you originally purchased your home, you had a VA funding fee, unless you were more than 10% disabled, in which case you had no funding fee at all. So if you had no funding fee when you originally got your loan, then you're not going to have a funding fee now either. But if you did have a funding fee when you originally got your VA loan, then you're going to have another funding fee, but this time it's going to be much less expensive at 0.5%. Now, the same thing can be done as when you originally got your loan, and you can actually roll that funding fee into your loan amount again, which we'll talk about more here in just a minute. But on top of that, you might have some closing costs. So typically you're going to have escrow fees, title fees, depending on where you're located, attorney fees, that sort of thing. But here's the kicker when it comes to refinancing a VA loan. There has to be a net tangible benefit to the borrower, which in most cases is going to result in a lower monthly mortgage payment. But with that said, there is a recoupment period of fees, closing costs, and expenses that are incurred by the veteran during this refinance period, and it cannot exceed 36 months, which essentially means the savings that you're receiving by lowering your monthly mortgage payment, if they do not recoup the fees that you're paying in order to get this loan within 36 months, then essentially the loan can't be done. It kind of goes back to that net tangible benefit that I was talking about earlier. Now, there are some things included like funding fees, property taxes, and other amounts that are held in escrow, but essentially there has to be a net tangible benefit to you, which basically means a lender can't just charge you a bunch of fees, build it into your loan, refinance you, and only save you a little bit of money, because otherwise there's no benefit to you. So it's basically a guideline that's in favor of you as the borrower, just to make sure it actually makes sense to move forward with this deal. Now, if you're watching this going, okay, Jeb, you've talked a little bit about refinancing, but where do I start? Who do I talk to about refinancing my mortgage? Please stop and listen to this. This is very, very important. Do not go online and search VA IRRRL, VA refinance, because what's going to happen is that you're going to have a few lenders that populate in that request. They pay a lot of money to be at the top of those search results, and they claim to be for veterans. But here's the thing. Those lenders overcharge veterans time and time again. So while they may say that they have your best interest in mind, understand they are for-profit companies. They are there to make money. So if you are calling one of them, just make sure you're getting another quote, just to make sure you're getting a good deal and you're not getting taken advantage of. Now, if you're watching this going, Jeb, where do I start? Who do I talk to? Well, you can actually work with myself and my team, and we would love the opportunity to guide you through that process. We'd love the opportunity to be one of those lenders that you shop around with, because ultimately we want to make sure you're getting a good deal. So if we can be of assistance to you, do me a favor and check that referral link in the description of this video. So we've talked about eligibility, we've talked about the benefits of a loan, we've talked a little bit about the cost. So now let's take a minute here and talk about the process. So you're going to call a lender, preferably us, and we're going to go through the process with you. But just like you did when you originally got your loan, you're going to have to fill out a loan application. Once you fill out that loan application, we're going to provide a list of documents that you need in order to move forward with that loan. Because it's a streamlined loan, there's not really a lot of documentation needed through that process. But here's the thing, you want to make sure you have a professional on your side guiding you through this process. There are lenders out there that are just order takers that you call and want to refinance, and they'll just say, yes, we can do it. And then they'll give you the loan documents and have you move forward. Whereas there's other lenders out there that will walk you through the process to make sure it actually makes sense. Just because you're saving some money, just because there's a net tangible benefit on paper, doesn't always mean it's a good deal. So you want a lender that can walk you through the process and tell you exactly what's doing, how much it's costing you, just to make sure the benefit is there long term. Because there are considerations and potential drawbacks that you need to take into account when you're going through this process. And one of those that I mentioned earlier is the funding fee and how it impacts your loan balance. You need to understand that you're raising your loan balance by refinancing that funding fee back into your loan. In addition to that, many lenders out there are going to refinance you back into a 30-year term. So say you've been paying down your mortgage for 2 to 3 years, and now you're going to refinance. Well, you're going back into a 30-year term, which means you're adding that 2 to 3 years back to the loan term, which on paper is going to look like it's saving you even more money. But what you have to take into account is it's pushing your loan out further into the future from getting paid off. And by doing that, you're essentially resetting the clock when it comes to that loan. So you need somebody to be able to walk you through where you are now, what the future refinance looks like, just to make sure it's something you want to move forward with. Now, one thing I want to be very, very clear on, this is not going to make sense for everyone out there. If you currently have a 6% interest rate on your VA loan today, looking at where interest rates are at the time I'm filming this video, it might not actually make sense to refinance your mortgage. And on top of that, it's going to come down to your loan amount. So in some cases, it may make sense to refinance, where in other cases, it may not. Now, if you're someone that bought or refinanced and took advantage of an interest rate when interest rates were at the peak back in September, October, November of 2023, then chances are it's a really, really good time for you to refinance and take advantage of those lower rates. But before you do that, make sure you take some time, check the referral link below, reach out to us, let's walk through the process, let's walk through what you're trying to accomplish and see if it makes sense. Or maybe you're someone that's already in the process and you just want a second opinion. Well, we're happy to do that as well, and you can reach us by using that referral link in the description of this video. Now, I know some people will watch this video and want to reduce their interest rate but also pull cash out. Now, understand that's a completely different type of loan where it's not as streamlined. You're going to have to provide documentation. You're going to have to do things a little bit differently. Now, you can do it. It's just a different process. Whereas this video is just about reducing your interest rate or going from an adjustable rate into a fixed rate loan and using that interest rate reduction loan. Now, if you're someone who doesn't even have a VA loan yet, but you are a veteran and you're just out there learning, trying to figure out what the process looks like, I actually created a video where I go over all the VA guidelines in order to get a VA loan. If you're interested in learning more, do me a favor and check out this video here.